Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I've been sending out a lot of things Friday, Saturday, and today after going over things and seeing that we're stopped out of many of those positions, which I'm not happy about because last week things were down so much. You don't like getting stopped out at that time. However, one of the things I've been stressing is that on up days, you need to sell some of your positions, whether it's rare earth or it's China or it's last week, treasuries, all those things. You need to sell some when they're up. And I'm going to go over the S&P 500 right now, as well as the three or four long positions I still have left. So let's get into it. So I just want to touch on a long-term chart of the S&P 500 to remind you. So, back in 2000, as we were hitting higher highs, we had lower highs on our RSI, or relative strength index, which is telling us that as prices went up, they were going up with less oomph, with less demand underneath the surface. And while these are just a condition, a negative divergence, it does flash a caution sign, and it's in the back of your mind that you don't go too big in those kind of situations. Same in 2000. This was about a 3 or 4 year negative divergence. In 2007, I want to say it was only 11 months. Look at the one we have now. This is 6 years plus we had a negative divergence. So, I've been talking about this since November that in the back of it's just a condition in the back of my mind. This is what I think about. Don't go too big, be diversified, all those good things. So I just wanted to touch on the big picture. Could this be a dramatic kind of a sell-off? Yeah. But let's take it one day at a time. So here we are. We're going to take a look at the last couple of years on an intermediate term basis. So here's a weekly chart. We're forming a bearish rainbow convergence where all these moving averages are going to come together. And when they do, just like on the China daily chart, this is a weekly chart, so this is magnified a little bit. So this week, I expect these moving averages to eventually touch sometime this week. Since this is a weekly chart, we'll see what happens by the end of the week. But I expect prices to continue down until these moving averages touch. And then you got two options: a type 1 convergence, a la this is Tom McClellan, want to give him his shout out. They can pause, so they can sit for a while until the moving averages come down, but the decline subsides. Or two is a type 2 retracement, is where prices will come back to the cluster of moving averages. Most likely, type 2 is going to be what happens here because there's going to be a lot of short covering when that happens. So in bear markets, and I do think this is a bear market, you can see when declines are really severe, but also on rallies, they can be really sharp, temporary, but really sharp. And you don't want to be caught short, of course, in that kind of an environment. So, um, um, so I see the futures are down a ton again. They're down 4% again. So I think you're going to get a washout here in the next couple of days. And then maybe by the end of the week, you start to get some sort of a bullish hammer where prices come back to where they started the down tick. And that kind of tells you you might want to get involved, but this is only going to be a temporary retracement. It has to get through 5,700 for me to say, this wasn't a, this is not a downtrend, that, things are going to go back to new highs. So, what I'm saying is that I expect a low here soon. So, maybe it's tomorrow, maybe it's the next day. And when that happens, I'm going to put out most likely just a buy to a neutral. I'm sorry, bearish to a neutral stance. So, maybe I'll go bullish, but it'll be a short-term call, and I probably see more of a neutral scenario. Here's the daily chart. So, just to give you some context, this goes back several years. We're just going to take a look at kind of this downtrend here. And here's where we're at. This is where we went bearish. This is where we went neutral. Here's where we went bearish again. So, another big washout day tomorrow. We get a really oversold condition. Most likely tomorrow, if it's down anywhere near what it's down today, I'll probably go to a neutral rating and look for a bounce. And the bounce will be, significant. They always are in bear markets because everybody now is getting bearish after this has already happened. And everything I look at is, bearish, which is a contrarian indicator for me. So that's where we're at. And I look at the S&P 500, and we actually broke our bullish trend line. This goes all the way back to 2022. And while the first stop is on a downward price projection based on point and figure chart is like 4,900, which is, we're almost there. But, again, this is just a landing area. The more significant thing here, forget the price projection, is that we've broken the bullish trend line. So, um, bearish on the S&P 500, looking to go neutral soon. Um, Meaning that I will try to buy back in some of the things as long as they haven't broken their point and figures bullish trend lines and haven't broken their patterns too bad. So, Exelon, this has been a good one. For the week, it was up 1.43%. But I do want to point out that we had a doji bearish candlestick last week. So prices opened at the low, shot up really high, and then by the end of the week was back down to the low of the week. So it shows that people were selling into strength. And our long-term price projection is 51 on this. So, again, what was I doing on all those up days? I was selling pretty heavily. I still have a lot in Exelon, um, relative to other holdings, but we're getting near the end of this too. So that's where we're at on Exelon. 10-year Treasury, 20-year Treasury, um, 5-year Treasuries, 2-year Treasuries, they're all bullish trend. And you can see our inverse head and shoulders here, left shoulder, head, right shoulder, neckline. Here's where we went bullish. We're looking for 103. And, this has been, along with our short position and have been an Exelon. These have been good holdings that have alleviated uh, any things that have gone down, like last week, like China or silver and some of those things. So, uh, Antero Resources down a lot last week, 16%, but it hasn't broken our stop yet. We're at 32. I do see that futures and natural gas are down tonight, but this is a weekly chart, so we'll wait and we'll see what happens here. Pattern is still intact, so this might be one that I would look to buy. If I go neutral on the market and this hasn't broken its stop, I might be looking to add to something like this. It's natural gas too, so I think it's got, uh, it's not in the crude oil field. Platinum, this is going to be a tough one because, as you know, silver had a big down week last week. This did too. This was down 380, but relatively mild. We do have a bearish engulfing pattern last week. But again, this is a tight consolidation. I'm going to stick with it for now. And where do you put your cash? If you don't want to chase T-bill, if you have T-bill, I mean, if you have the 10-year Treasury, IEF, or you have TLT, or you have any of those fixed income, they're going to give you more appreciation on the upside. But for cash, for things that you sold out of, you might want to put some of that in TBIL. I think the yield I know is over 4%, and it has very little volatility. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. If you have any comments or thoughts on how my recommendations and approach to this YouTube channel could be better for you, please let me know. It's a work in progress. Thank you. Have a great evening, and we'll talk to you probably tomorrow. Adios.